Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 22nd of April, 2024, though it's very early Monday morning. Last week, we saw gold attempting once again to reach the previous week's all-time high. Did not quite make it. But silver making a real attempt at touching that $30 level. Will gold reach an all-time high this week? And silver breaching $30, the highest level for 11 years? Or will they consolidate and fall back? To find out, let's take a look. Now, before we look at last week's data and give our estimate for this coming week, just a reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now, gold rose $46 last week, continuing its upward trend, rising from $2,345 to $2,391. Having been as high as $24.18, yes, breaching that 2,400 level, and a low of $23.25, a rise of 2%. In our last update, we predicted that gold would trade between $23.25 and $24.50, which it did, and closed in the middle of that range. Gold spread between high and low was $93, following the previous week's rather impressive $128 spread. In sterling terms, finished the week up £49 at 1,935, and in euros it closed up €39 at 2,246 euros. Silver rose 73 cents, moving from $27.96 to $28.69, having been as high as $29.28 and as low as $27.66, a rise of 2.6%, so gaining ever so slightly on gold. Last weekend, we forecast that silver would move between $27 and $30, allowing for a slightly larger spread in view of the previous week's $3.54 and a similar spread the week before. And it remained within our range of 27 to 30 quite comfortably. The difference between its high and low was $1.62. In sterling terms, silver closed up 77 pence at £23.25, and in euros it closed up 0.71 euros at 27.01 euros. The result is that the gold to silver ratio fell from 83.9 to 1 to 83.4 to 1. Bitcoin currently stands at $65,064. That's up $715 on the week, though it has been as low as $60,225, in fact, just on Friday. So it was essentially $5,000 lower. Equities were broadly lower across the scale, except for the Dow just moving into positive territory on Friday. It closed up 3 points on the week at 37,986 points. The S&P 500 closed down 156 points at 4,967, and the Nasdaq closed down 893 points at 15,282. The FTSE index down 100 at 7,895. Oils were lower. We were expecting this really due to the strength of the dollar. Brent crude down $3.16 at 87.29, and WTI crude down $2.52 at 83.14. In fact, we had expected to see oils dip last week when the dollar significantly strengthened, but obviously Middle East tensions put pay to that. The dollar index stands at 106.15, and that's up again, albeit 0.12 points on the week. Now, last weekend we pointed out to watch out for the retail sales figures on Monday, with economists predicting a rise of 0.3% for March. The figures were better than these predictions, coming in at 0.7%, but still down 0.2 on February, but showing a strong first quarter nevertheless. Sales minus automobiles and gas rose an even stronger 1.1% last month. You see, retail sales represent about 1/3 of all consumer spending and offers clues on the strength of the economy. Robust sales in early 2024 could be another reason the Federal Reserve decided to put off reductions in interest rates until later in the year. We did see a brief dip in the gold price when these figures were announced, but it very quickly recovered and strengthened. Nothing else really moved the needle in terms of economic data. Now, this coming week should be a little more exciting, especially on Friday. On Tuesday, we have flash services and manufacturing PMIs. Thursday, US GDP figures for Q1. Analysts are predicting 2.2% growth, but we would not be surprised if it is just a little, or a tad, as we say in the UK, higher. On Friday, we shall see the PCE figures for March. We're expecting an uptick, but a marginal one. That's in the overall rate of inflation. Analysts predict a 0.3% figure for both PCE and core PCE, resulting in annual rates of 2.6 and 2.7, respectively. Of course, any major deviation in either direction will have an effect on the US dollar and precious metal prices. The sharp escalation in regional tensions driven by Iran's missile and drone attacks on Israel prompted investors to gravitate towards the traditional safety of gold. Gold is stabilizing around the 2,400 level. This suggests that while investors are cautious, they also remain hopeful for a swift de-escalation. We have to be mindful that these geopolitical tensions are propping up gold because the robust economic data coming out of the US, with the advent of inflation reducing more slowly, and thereby interest rates cuts likely to be delayed, will under normal circumstances act as a headwind and push prices lower, at least in the very short term. This we're not seeing, and it was interesting to note that central banks, particularly in emerging markets, added approximately 50 tons to their gold reserves last week. In addition, although the dollar index closed up for the week, it did soften a little on Friday, as we witnessed Treasury yields dipping slightly. Holding gold back are announcements by Federal Reserve officials hinting at maintaining higher interest rates for a prolonged period, countering expectations of an imminent rate cut. But analysts are expecting the bullish momentum to continue, especially if geopolitical tensions worsen. Silver prices closed last week near their multi-year high at $29.80, showing potential for significant movements in the coming days. Geopolitical tensions in the Middle East escalated last week, with Iran intensifying its military activities against Israel. This conflict has pushed investors towards silver as a historically stable asset during periods of political unrest. That said, silver has reached a pivotal point, which historically it has significantly backed away from. Any rise above $30 could see prices move higher due to FOMO, or fear of missing out, and any fall below $27.50 could see it fall back to $26 very quickly. Industrial demand for silver is on the rise due to an expanding economy, and we could very well see, if geopolitical tensions worsen, silver rise to its highest level for 11 years. There could, just could, be exciting times ahead. So where do we see gold and silver prices heading this coming week? Well, our forecast is very similar to the previous week, although marginally higher. We are expecting a slightly topsy-turvy week, particularly on Friday, though a level-headed investment analyst would say consolidation is really required prior to another step up. So gold we envisage to trade between $23.40 and $2,460, with $2,300 and $24.75 as outliers. We predict silver will trade between $27.50 and $30, with $26.50 to $31 as outliers. What do you think? Do share your thoughts. Thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, and pop on over to Finances Do Matter and subscribe there if you haven't done so. And all that remains is to look forward to a prosperous week ahead.